Hey guys, thanks for checking out the video blog for the month of January. And we got a couple great topics to talk about this month. First of all, I just want to thank you all for the referrals. Last month we had a record number of referrals from some of our past clients, and we're super fortunate to have that. So the first thing I want to jump into is, we talked about this last month, but consumer confidence. You know, I have a lot of clients throughout the week that come in and they heard about rates being in the threes last year, and they're asking me, why are rates higher? You know, the Federal Reserve has barely moved rates. We've got a new president. We don't understand why rates are higher. Or some clients blame our new president for rates being higher, and really it's just an understanding of why rates are higher. So by and large, the biggest reason why rates are higher right now is because of consumer confidence. So I'm gonna pull up a slide real quick here and read this to you. It's from Michelle Jamrisko with Bloomberg News. Consumer confidence climbed in December to the highest level since August of 2001, as Americans were more upbeat about the outlook than at any time in the last 13 years, according to the New York-based Conference Board. American households are expecting a Donald Trump administration to deliver. They are more upbeat about the prospects for the economy, labor market, and their incomes. So, you know, no matter who you voted for, the reality of what's going on right now is people are very upbeat about business, about deregulation, and it's spurring on the economy. And so what you're seeing is record highs in the stock market. And basically what's happening is investors on Wall Street are pulling money out of bonds, putting them into stocks, betting on our economy improving, and that is driving rates up a little bit. And so when I talk about rates being higher, it's important to note that rates are a little bit higher than they were last year. Of course, they were at all-time lows last year, but they're still at probably about a 90-year low. They're sitting right around a 4.25 today for the month of January, and people are obviously still very happy with the rates they're getting. So it's important to understand that. The second topic that I wanted to touch on, you know, last month we had FHA mortgage insurance rates cut, and then 2 or 3 weeks later, as soon as the Trump administration was voted in, they repealed that. And I just want to talk about that briefly. You know, for those of you that have either used an FHA loan, or maybe you know someone that's used the Federal Housing Administration loan in the past to buy a house, which is one of the #1 loans that we do here in Redding, you'll know that there's a mortgage insurance or a monthly premium that you pay to the government to obtain that loan. Well, back in November, we saw that amount drop, and you know, some people that were currently using the FHA loan were very happy about that. And just 2 to 3 weeks later, that was repealed. And so we literally had to call clients 2 weeks later and tell them that we're sorry, things have changed and you're not going to be able to get that. And so, you know, the point that we're bringing that up is we do expect to see more changes like that heading into the next couple years. And I, for one, think that although that may not have been a positive change to some people, there will be some very positive changes going forward. You know, our current administration is talking about the Dodd-Frank bill that was passed back in 2009 that really regulated the mortgage industry from some people's perspective, to the point that it has become very, very tough to get a loan done. And we expect to see that loosen up over the next couple of years. So we're very excited about that in the mortgage industry. We think that we're going to see some competitive loan products coming out of Wall Street finally, and really, really excited to share more about that going forward. The last topic I'd like to talk about is where we're heading going forward. You know, a lot of people are wondering, what is the housing market going to do this year? Whether you're a first-time buyer buying a house, whether you own a current home and you're thinking about selling that house, taking that equity and buying your next house, or whether you're a real estate investor wanting to buy a rental property, most people in the industry think that it's going to be a very, very good year, even with rates being up a little bit. And I'm going to explain why. You know, the first thing we want to talk about is low inventory. And I'm going to pull up a slide here real quick and show you. Currently, we're down almost 9% year over year to where we were last year with homes that are available on the market. Here in Shasta County, we have literally seen some of the lowest amounts of homes for sale or inventory for sale that we have ever seen, making it really, really tough for home buyers to find homes, creating bidding wars, etc. And so we expect that trend to continue throughout the year. One of the things that's exciting about this year here in Shasta County is the new construction. I'm personally working with a couple developers here locally that are going to start a few subdivisions this year with some really great homes with custom amenities. And you know, this is one of the first times in several years we've seen this amount of new construction activity, and I, for one, am very excited about that. So if you have any questions about that, as far as new construction goes, you can always give me a call. The next thing I want to talk about is what we think rates are going to do throughout the year. So I want to pull up one more slide here and talk about rates. If you look at where rates are today, they're at about a 4.25. But I'm going to give you 4 or 5 quotes from people that are a lot smarter than me when it comes to projecting what rates are going to do. Starting with one from HSH, we think that conforming 30-year fixed rates probably make it into the 4.6 to 4.7% range at some point during 2017 as we peak. And if you go through the rest of these slides here, all independent of one another, you'll see that most experts are predicting rates to go slightly higher, kind of into the high 4s or even the low 5s towards the end of this year. And I, for one, would probably agree with that. Now keep in mind, you know, a 4.5 to a 5% rate is still lower than the 60-year average. So even though they're going up a little bit, they're still very, very good. And the last thing I want to bring up here is another slide. This is from Bob Sprinkle, a local appraiser in our county who I work with quite a bit. And I thought he made a really good point when talking about the housing market today. If you go back to 2006, the average home price was $293,000. The average 30-year fixed mortgage rate was 6.41%. And based on those facts, the average mortgage payment was $1,654. Now, if you look at today, or this last year, I should say, 2016, the average purchase price was $232,508. The average 30-year fixed mortgage rate was 4.09%, and the average mortgage payment was $1,010. So even with rates being up a little bit, with home prices being as they are, we are still, on average, $600 in a mortgage payment less than where we were in 2006. So it's really important to take note of things like that. I think some people can sometimes, including myself, can have short-term memory loss of where things were. So we really expect this next year to be a great year. A lot of sales, new construction, and rates still will be generally pretty dang low. The last thing I want to touch on is we are going to be doing another home buyers workshop. So for those of you watching this, if you're thinking about buying another house, or if you have a family member, a coworker, or somebody that would benefit from being in an environment where we talk about everything from rehab loans to renovation loans, buying short sales and foreclosures and investment properties. This is coming up in February, and we have a date on the calendar. We'd love to talk to you about that, so feel free to reach out to our office if you would like information. Other than that, thanks for checking out this month's blog. Hope you guys have a great month, and we'll talk to you soon.